Everyone's waiting for the mainstream media to call the next Bitcoin bull run. But let's be honest, by then, the biggest opportunities will have already passed. The smart money is making moves right now, while most people are still stuck looking in the rearview mirror, waiting for some big green light that's actually been flashing for months. The problem? The real signals aren't making front-page headlines. They're buried deep in the charts, in network data, and in dry regulatory filings most people find boring. But not us. Today, I'm going to show you 5 under-the-radar signs that suggest the next bull market is quietly getting started. The first sign is one of the most reliable catalysts in Bitcoin's history, the halving. Every 4 years, the rate of new Bitcoin creation gets cut in half, creating a predictable supply shock. Historically, this event has kicked off a new bullish cycle. The 2024 halving was different though. For the first time, Bitcoin smashed its all-time high before the halving, mainly thanks to a flood of institutional money. Now, 2 years later, in April 2026, we're seeing what looks like a classic post-halving echo. Analysis of previous cycles shows the market often trends up about 12 to 18 months after a halving. But this cycle is proving to be weaker than previous ones. While the all-time high in October 2025 took the price above $125,000, this was only a 97% gain from the halving price. For comparison, the 2020 cycle saw a 761% increase. This isn't a random pump. It's a familiar market rhythm, just playing out with less intensity. The second sign, and what really makes this cycle unique, is the institutional adoption through Spot Bitcoin ETFs. Their approval in 2024 was a huge deal, but what we're seeing in 2026 is the next chapter of that story. After a few months of outflows to start the year, institutional demand is showing signs of life again. In March 2026, Spot Bitcoin ETFs saw a decisive turnaround, with over $1.3 billion in net inflows, breaking a multi-month streak of money leaving the funds. BlackRock's iShares Bitcoin Trust, IBIT, is still the dominant player, attracting most of this new capital and showing that big money remains confident. This isn't just retail hype, it's Wall Street systematically buying in, which provides a level of demand that simply didn't exist in past cycles. Section 3. The regulatory fog is finally lifting. For years, one of the biggest question marks for Bitcoin has been regulation. That fear is now starting to transform into a source of clarity. The third sign is the clear regulatory framework that's starting to emerge in the United States. Throughout 2025 and into 2026, we've seen progress on market structure bills like the Genius Act, which is designed to create a clear set of rules for stablecoins and other digital assets. In April 2026, FinCEN and OFAC jointly proposed a rule to implement the Act's anti-money laundering requirements. On top of that, the White House has confirmed it plans to formalize a strategy for a strategic Bitcoin reserve, signaling a powerful official acknowledgement of Bitcoin as a legitimate asset. This shift from an uncertain to a structured regulatory environment is removing a huge barrier for cautious, compliance-focused institutions looking to enter the market. If you're getting value out of this breakdown, do me a favor and hit that subscribe button. We're cutting through the noise to bring you actionable insights like this every week. You don't want to miss what's next. The fourth sign comes from looking directly at the blockchain itself. On-chain data gives us a transparent view of what's really going on, and right now, it's pointing toward a major accumulation phase. A key indicator, the MVRV Z score, which compares Bitcoin's market value to its realized value, currently sits at 0.77 as of April 17, 2026. Historically, scores in this range suggest the market is not in the overheated red zone typical of market tops. Another key metric, the Puell Multiple, which tracks miner profitability, is in a relatively low range, indicating that while miners are profitable, they aren't under heavy pressure to sell. This suggests we're in a neutral phase, not a frantic top. We're also seeing patterns of long-term holders accumulating coins, moving them off exchanges and into cold storage, which tightens the available supply and can build upward price pressure. Finally, the fifth sign is right there on the price chart. After a period of consolidation, Bitcoin is showing serious technical strength. In mid-April, the price broke through key resistance, with some analysts now seeing a path toward the $80,000 to $90,000 range. Bitcoin surged past the $75,000 level, which had been a significant barrier, and is now trying to establish it as a new support level. Momentum indicators like the Relative Strength Index, RSI, suggest bulls have taken control, and a rise in trading volume confirms the strength of this move. This confluence of bullish technical patterns, from moving average crossovers to strong RSI readings, all point to the path of least resistance being upward. When you combine this technical picture with the fundamental tailwinds, the case becomes pretty compelling. Conclusion. So, while the mainstream narrative might be focused on fear and uncertainty, the signs of the next bull run aren't just brewing, they're here. We have the predictable, though muted, post-halving cycle, a new wave of institutional buying through ETFs, clearing regulatory skies, strong on-chain accumulation signals, and a powerful technical breakout. The window of opportunity to get positioned before the crowd rushes in seems to be closing. The biggest gains are usually made by those who see what's coming, not by reacting after it's already happened. Let me know what you think in the comments below. Which of these signs do you find most convincing? Thanks for watching.